Welcome to another episode of Out Loud Geek, where we discuss science fiction, fantasy, cooking, the outdoors, and more. Shareholder confidence in media streaming giant Netflix continues to fall as the share price for Netflix stock has plummeted by 35%, or around $120 per share in today's midday trading. This follows yesterday's report from the streamer that they had lost 200,000 subscribers during the first quarter of 2022, and are expecting to lose another 2 million subscribers during the second quarter. Netflix stock is currently worth around what it was in 2018, and it's down by nearly $500, or nearly 67% of its 52-week high of $700.99, which was reached around 7 months ago. Back in January, Netflix had reported that it expected to gain 2.5 million subscribers during the first 3 months of the year. But those expectations were shattered when the company announced that same month that they were planning to raise monthly subscription rates, which they did in March. And other factors such as Russia's invasion of Ukraine led to the company shedding 700,000 subscribers in Russia. Netflix's first quarter profit was $1.6 billion. That's down from $1.7 billion that the company reported for last year's first quarter. It cannot be overstated just how bad of a report this is for the king of streaming. The company's stock has fallen more than 40% year to date. And coming into the earnings, there was a lot of concern from investors regarding its growth. It has been more than a decade since the company lost subscribers. Among the various reasons that Netflix blames its losses in revenue are households sharing passwords, though the company has no real data to back up its estimated claims for how many households may be doing that. Netflix is also blaming sluggish economic growth and inflation. The company's bad report is likely to roll the streaming market given that so many other firms have changed their business strategies to compete with Netflix. Disney stock, for example, which is one of Netflix's biggest rivals, was down roughly 5% Tuesday evening. Moving forward, Netflix wants to find a way to monetize password sharing, and for the first time, they suggested the possibility of introducing a lower-priced ad-supported subscription tier, which is something that Netflix co-CEO Reed Hastings has always been against. During a post-earnings report, Hastings said, "Those who have followed Netflix know that I've been against the complexity of advertising and a big fan of the simplicity of subscription. But as much as I'm a fan of that, I'm a bigger fan of consumer choice and allowing consumers who like to have a lower price and are advertising tolerant get what they want makes a lot of sense." We actually canceled our Netflix subscription last month when the rates went up. We'd have to see what a lower cost ad-supported subscription tier would actually cost before considering using it ourselves, as well as knowing how many ads it would involve. Netflix really needs to rethink its priorities if it doesn't want to continue losing subscribers. Thank you for watching today, and thanks to everyone who has subscribed to our YouTube channel. We appreciate your support. If you enjoyed this video, please press the like button below, and please feel free to share a comment. If you would like to see more of our videos in the future and help support this channel, please subscribe right now by clicking on the red subscribe button below. You can also find us on Facebook and Twitter by clicking on the links in the description. Until next time, this is Out Loud Geek.